Hey Alpha fam, welcome back to another episode of Alpha Commission. Today I want to just go over the pump that we're seeing on Bitcoin. So finally we do get that pump, and we've been waiting for this. I've been mentioning that I was looking for that kind of fake out to the downside, and then signs for a pump potentially up to 35,000 or thereabouts. We do have some resistance in this area. And of course, if we were able to get some wicks over there, we'd fill that CME gap on the daily. Now, has price action actually been waiting on this holiday weekend for CME to reopen? Maybe that's the case. I do believe CME has abbreviated, shortened hours due to the holiday. I'm not sure that applies to every asset class, but in this case, it does look like that pump was waiting for the professional exchanges to have some chance to contribute to the pump. And so far, we are reaching that kind of resistance area, which we can talk about on the regular chart over here on the 24/7 charts, which I have marked out here. Of course, we have a couple different ways of looking at this. One of them is this kind of downward channel that we've kind of broken out of, and the other is this horizontal channel, which we've sort of just been meandering through. So, of course, for the downward channel, it would be something like this, right? And now we're getting a breakout. And for the horizontal channel, it would be something like this, right? Where you can see that we did this, and we're just at the top of that horizontal channel, right? So however you want to look at it, whether you want to look at it as this horizontal channel, or you want to look at it as this kind of diagonal channel, it really changes your perspective on how you're trading, right? Because in case of the diagonal channel, you've actually broken out here. But in case of the horizontal channel, you haven't yet, right? In case of the horizontal channel, you really are just continuing to go sideways, and nothing particularly special has happened today. However, it was a pretty good pump. I believe it was about a 4% pump. And if we go to the lower time frames, let's go ahead and take a look at this. Yeah, you can see that was just a nice skyrocket. And where are we getting resistance here? Well, we broke through that resistance that I marked here. Look at this. This was very interesting, right? We came right up to that resistance that I had marked out. Look at that, right to the dollar. Went all the way down to this diagonal support that I had marked out, and then we bounced all the way up to the top of that resistance, this diagonal resistance, went all the way back down, and then we were able to pop up. So not only did we respect this resistance, we also respected this resistance, and now we're respecting this resistance up here. So, if people say that technical analysis doesn't work, just keep in mind that if you had been following these, these kind of trend patterns that are being printed here, you'd probably have a pretty good idea. And just like I have a kind of a red zone up here that I expected us to be deflected from, if we didn't break through it, we could be rejected from there and potentially go to the bottom of this channel. You can also consider that there might be some kind of zone up here, right? That's just, where we get these kind of wicks. You see all these wicks, right? And we can color that red to match its brother. And then ultimately, we still have this kind of resistance zone up here. Now, this resistance zone, I'm not even sure if I should really have it colored in as a zone. We all kind of know that it's resistance. It really goes across the entire board. I don't need to just have this little line there. You could just kind of extend this all the way over. And it's approximately this 31,250, $31,300 area. So I'll just eyeball it, right? And I don't expect too much precision there. Just we do see where we got rejected from it once. So probably just align it with that one. And so that's going to really be the next boss that we're facing as we're trying to bust through this area and potentially have a nice positive momentum week for once. Now, what's this yellow line? This yellow line is going to be where we started to get these like a bigger, weightier kind of wicks, where we had these kind of launch points, where we had these really nice bounce points, back here, and where we launched off of. So if we can get past this area, then potentially, potentially this is a limiter, right? Um, being accepted above that would almost be like being in another bull run, and definitely if we got over 40,000, right? But I'm really skeptical that we're going to be able to get above, those areas. Maybe some wicks just to fill that CME gap. If we do have a major run, um, getting above 35,250 would be a pretty big stretch, already, right? It would already be a pretty big stretch. So, we can just take this one step at a time and we don't have to be looking further than this CME gap. That's already a long ways to go. And again, we're not really seeing anything particularly special on the 24/7 exchanges. On these CME exchanges, we are seeing a little bit more of a, again, like these wicks, it's just very difficult to align these things. But we are seeing a little bit more of a breakout, right, on the CME than we are on the 24/7 exchanges. So if we do, continue to go, um, this is probably our best chance of breaking out of this downtrend that we've been in. And let me go ahead and also get a horizontal here, something like this. So for our horizontal, you can see, we, again, like we didn't particularly break out of the horizontal area. And this is a problem. We need to break basically 31,500, okay? Potentially we need to break 32,000. So if we're not able to break 30,500, that's kind of a problem. However, if you consider that we're just breaking out of this downward channel, then it could be that we're just preparing to perhaps do a retest where, we've now broken out and potentially we come back down and then we can potentially go, right? And then it's going to look a lot clearer. And, our next boss is going to be here and here. And then our stretch goal is going to be up here in this area, right? Around 35,000. So this is how I'm looking at the chart right now. There's no real reason to be bearish right now. Obviously, I've been looking for this. I've had this check mark, printed on the chart for quite a while. I've been hoping for this moment. We've been in just a really huge downtrend for a long time, and it's just about time that we got some of this positive momentum building up. But again, I just want to temper expectations. It's not really anything different than what we did right here or what we did right here, and a little bit better than what we did there. But we also did it here, so like we do this, right? We can do this. It doesn't mean that, you know you don't need to go crazy, right? You should wait and if you didn't buy in at support, then you should make sure that you have all the confirmations that you need for your confidence before you just throw your money at it. Because the reason why I'm showing you these resistances is because if you were just looking at the downward channel, you might think that you're free to go up now. But I just wanted to point out that we are technically at resistance. We have resistance here, we have resistance here, we have resistance here, we have resistance here. We've been in this area for so long, we're actually building up our own resistances in this area. So this whole area, you know, are potential deflection points down. Okay, we don't have to fill this CME gap. That's just an expectation. It could be a trap also, right? It could be just a lure to try to get money to think that we're going up here, and then they smack us down as people FOMO in at these levels. And I want to show you what that could look like. Of course, I pointed this out on other videos as well. But essentially, let's go to the 4-hour. Essentially, it's like this, okay? And you guys might remember me drawing this from the other episode, right? We just have some area of consolidation and then a pump up, and then, it's you had the fake out down and you had the fake out up, right? The fake out down and the fake out up, and then we continued down. This is kind of a fake out down, fake out up, and then the continue down, right? Fake out down, fake out up, continue down. Fake out down, fake out up, continue. Well, basically this chart is continue. This was actually a pretty good little run, so probably shouldn't dismiss that one. But you can see we got back into this thing right here. Fake out down, fake out up, continue down, right? So this pattern gets put in over and over and over and over, right? And over again. And you can just see this kind of fractal playing out. So as you watch this price action, of course, this was just the scary drop. Same thing as this, right? Same thing as this. So that wasn't really a fake out. That was the actual real, scary drop. But what we did do is we kind of faked out here. And then if we did put in a fake out up, which would be consistent with the pattern, you can see that this fake out to the upside doesn't get significantly higher than the starting price. See the starting price and see the fake out height? It's maybe a little bit higher, right? Sometimes it's lower even. But even if we consider like this entire area where this was kind of a fake out down and then a fake out up and then continue down, like if this was just a big one, you can still see this area and this area, right? It's just a little bit higher than the entry. And so if you consider that pattern, let me just clean up the chart a little bit. If you consider that pattern, then if this is our, our kind of pattern here, you would expect the fake out to be like this. Just if we are going to continue to the downside, you would expect maybe something like this. If this is where we started, this was the fake out that kind of liquidated the longs, right? And then this liquidates the shorts, right? And then it continues to the downside. So just to be on guard, okay? Don't get over bullish, don't get over bearish. If we are able to pump and fill in the CME gap, then go ahead and take your profits. I recommend having multiple levels of taking profits if you bought at support down here. And if you didn't buy yet, then if you do have a portfolio, you can consider these areas of resistance as possible places to de-risk. If there are some things that you just wanted to get out of, you could slowly de-risk as we get up, right? And, if we do have a pullback like this, And if we do use this diagonal as support to come back up, right, if we get a nice bounce here, then you might consider that that's a possible spot to buy just on the retest of the breakout. That's what breakout traders typically do. Again, like I always emphasize that I prefer to find a support, right? It doesn't matter if it's diagonal or horizontal. And I prefer to buy at supports. You know, there was a wick right here. There's a wick right here. And then you have the whole range to play with, plus the breakout, right? And if you start coming back down, well, you're still in profit. If you wait until the breakout, like many breakout traders do, you run the risk that this doesn't hold as support and you continue to break down. And so you're below your entry. But usually a support will hold if you're in a nice channel. So, these are the risks that you're going to have to take if you're trading a breakout as opposed to buying at support. And it's very scary to buy at support. All right, I always mention it's very scary to buy at support. But if you buy there, it's the lowest risk that you're going to have in all of your trades. So we already knew that this diagonal existed. We already knew that this diagonal support existed. And so this was a trend that had a nice range and channel, and you could have just been trading it, the entire time, right? All these last couple weeks, we've been talking about these ranges, these channels, both the horizontal and the diagonal, and today was a really good day if you did buy at that support. If you were playing this support up here, right? Because this is another one that we talked about where, maybe this was a fake out to the downside, right? Kind of a little fake out, fake out, fake out, fake out to the downside. Then when we got back up into the range, like I was talking about on yesterday's episode, then again, we were at support, right? And so that would be a possible place to buy in. Of course, I'm not making calls on these things. I think this asset is performing very weakly. Right now, I don't even see us getting above, this horizontal range. So, I wouldn't take a trade in the middle of this range, and I wouldn't just take a breakout without some confirmation bounce at a minimum. So, because I don't know if this thing's going to topple over or what. I was expecting this breakout. If you'll remember, I had these lines drawn out, and I was waiting to be able to print the third one. And that corresponded to what I was trying to show you. Where'd it go? Back here, right? Just ignore that arrow. And ignore that also. And it was trying to, show you this type of a pattern where you can have just this kind of like ranging and then kind of a dip down, and then there's a sudden turnaround. You can go ahead and look at the last couple episodes, and this is what I've been primarily focused on. I've been hunting this pattern down. I haven't been afraid. I didn't think that we were just going to fall off of a cliff. One of the giveaways for me was that fake out to the downside. Again, like if you just look at the fractals that Bitcoin plays, all those shapes that I was showing you, those kind of N shapes, right? Where there's a fake out down, a fake out up, and then continue to it's like a backwards N, right? or we can just call it a lightning bolt. So all these little lightning bolt shapes, like they happen over and over and over again because they fake out to the downside and they fake out to the upside. But you have to understand what that really is, okay? At its core, let's just take a look. Even though this is the top of the chart, it's not really any different. Basically, you have a nice range, okay? So let's just give that a neutral color. You have a nice range, and then people are trading this range, all right? So they can just trade that range. But what are they going to do? They're going to have stop losses, right? If they're going long, they're going to have stop losses at the bottom. And if they're going short, they're going to have stop losses at the top, right? So, what do? Like, how can you liquidate these people? Well, you have a fake out to the downside, right? That wick down and that wick up. It's going to liquidate all these people, this one, and this one right here is going to liquidate these people. So they basically collected the liquidity of the chart, right? They liquidated people in both sides. And what does that do? That prints kind of this backwards N when we're in a downtrend, right? And that just takes care of that psychology and gets rid of the majority of the market, frees up some liquidity to push the market down. And so this type of a fake out to the downside, these kind of like crazy wicks down, or just breaking the range. This isn't a perfect example here, but this one is. It's just a good sign. Just a good sign that there's potentially going to be some pumping. Like, why would you liquidate the longs without actually continuing to the downside? Like, if this was going to be real price action down, it would have gone like that, right? But as soon as it bounced up and you realized they liquidated these guys, right? If they liquidated these guys, then you have to just assume that they're probably going to take it up. Because why else would they liquidate these guys? There's only really two reasons why: to liquidate these guys before they go on their way up, or they're just going to continue down. And if you're bouncing, then it's probably going to continue to the upside. That's how I interpret those things. I think on average, more often than not, that's the case. And so for me, I wasn't afraid of this last kind of wick to the downside. I was actually looking forward to it. Again, that's why I drew this check mark almost a week ago, and why I've been hunting for this pattern. I've just been waiting for them because we've been ranging for such a long time. I've just been waiting for them to liquidate these guys before continuing to the upside. And when we bounced, that was my sign. Aha, we're probably going to pump soon. And sure enough, look at us. And there's another reason why. Guys, the stock market has been pumping, right? So, I told you that there was the options expiry and that the bears earned like 300 to 600 million dollars, something crazy, some crazy amount of number, by pushing the chart to the downside, this wick down, right? And by keeping us at these low price levels, even while stocks were pumping. But as soon as they got their money, as soon as they got that 300 to 600 million dollars, right, whatever it was, what are they going to do? They're not, they're going to take their money, right? And so the chart was then free to pump to where it maybe wanted to go. And so there may be some delay in the Bitcoin chart, in the crypto industry, before we get the pump. Or, it could be that, the pump in the stock market is actually what saved us from continuing to the downside. But whatever it is, maybe it's a combination of both things, because it also gives confidence to the market, right? When we see stocks just pumping, like let's go ahead and look at the NAS right? Like this, right? Look at this pumping. It's still just following my drawing here. And again, like I marked, I hypothesized this would happen like back here, right? So it ended up having a triple bottom, and I'm not sure. I wasn't sure if it was going to be a double bottom or a triple bottom, but it ended up being a triple bottom, and we've been pumping here. So this could give confidence to the crypto market. So there could be a combination that the stock market um, simultaneously rescued Bitcoin and crypto from a potentially disastrous drop, right? As we were losing the support, where perhaps we were going to test the bottom of the range again, right? Maybe even come lower, like 25,000. Who knows? Like this was a very weak chart, so that could have happened. But at the same time, it could be just the options expiry was going on, and so then that, the money is actually flowing back in here and was going to boost it up. And we had very mixed indications because look, there was this thrust down and then a thrust up. Like a pretty sharp one, like a very deep thrust down. So this pump to the upside, it's being obscured by this dump, right? This options expiry, shenanigans where the big whales and the big players were going for that 300 to 600 million dollar prize, right? That $500 million prize. And so they got it. And now we can see if the chart can pump up the way that its stocks, its stock brothers have. And if we do go ahead and look at some of these indicators with fresh eyes, we can now see that we are starting to get those kind of like a positive slopes. This is what we want to see, where this kind of red area can kind of turn into a nice blue area. We can see, yep, our Stokes has turned to the upside on the daily, so that's a good thing. And our volatility is on the floor, which means that there could be some expansion. And so as long as the Stokes is pointing to the upside, then if we get expansion off of the volatility, then potentially this could carry us up as much as 20%. And that 20% to the downside, of course, was going to bring us to that $23,000, $22,000 area. But a 20% pump to the upside, right, that could bring us to that CME gap, that $34,000 to $35,000, right? And it just depends where you start measuring from. So it's almost exactly to that resistance that I marked out, right? So, like these numbers, I mean, these levels are very legitimate. And, I gave you different resistance levels. I colored them differently for this episode, just turning them red and green depending upon, if they're resistance or if they're support. This one arguably has been turned into support, so we can watch that one. Maybe I'll just turn it purple for now until we can confirm that it holds. But, it's kind of a mid channel, right? But we are getting up to that next resistance that I had suggested, and we were kind of getting rejected. So we do have to see how do we play this very heavy resistance area to see if we can actually get that 20% expansion. But the reason why I'm showing you the Stokes and also the volatility being on the floor is because the combination of these two things can carry us up as long as they're in alignment like that. We also have our directional volatility still expanding, which is good. It can kind of hang out at the top there for a while, and it usually continues to expand while it's up in that area. So this suggests to me that we could kind of consolidate up here in our directional volatility, and that would be a good thing. That would carry us home, and then we're probably going to fall back down, right? Because that's what we always do once we get overheated at the top. I don't want to spend too much time here. Um, yeah, we did have that downturn. This is what was faking me out here, and then we had a turn back up. That's good. I want to check out the ADX to see how. There we go. Okay, that's what I was looking for. Last episode, you'll remember that I was looking for some type of indication that we were going to have some kind of positive momentum on the daily on the ADX, and I just wasn't getting it. We were just having this negative, both of them were turning down, and so I was hopeful. Again, I wasn't scared that we were going to drop to hell or anything, but I was just kind of skeptical, wondering what was going on here, because you can go sideways for some time. But having this uptick while the ADX overall is above this 25 zone, that's a very good sign. It means that this could continue to be a decent trend, and hopefully we can continue. Uh, if these cross, if the red and the green cross, then it will be very positive. What I don't want to see is a rejection like this, right? But if they cross, it should be a good sign as long as we're still in these areas, as long as the pink line is still in these areas up here. So just paying attention to all of these things. Of course, I was mentioning that the MACD was kind of giving it away, right, in advance. In this case, the MACD was the hero indicator. It was showing us the potential to continue to go, even back here. And so again, that's another reason why we shouldn't have been too fearful that we were just going to drop down or something. We were at support. All of our indicators were fairly at support, and there was a lot of mixed indications. There wasn't any clear concept that we would break down. And here we can see on the daily, finally, we have a clean breakout of the bearish control zone. So we are back into a regular kind of area on this scale, and it's looking pretty good for right now. Will we come back just to kind of check back before continuing? Perhaps, yeah. So on the 2-day, the 3-day, all of these are looking either bullish or positive. The weekly is flat. I'm guessing the monthly's still down. Yeah, the monthly's still down. So this does show us a lot of potential for the next couple days, just in terms of how this might play out. Maybe we do have a couple days, maybe even a week or so of positive price action. I'm not going to call anything. I really don't want to be making calls, but I've been watching this one very carefully. If you've been following along with me, then congratulations on protecting your capital while also thinking strategically. And the 5-day here is also starting to get a hint of slowing down on the negative side. So if we can get above 32,000, then we can even get a positive, positive momentum on the 5-day. That would be excellent. Yeah, the 3-day looks very good. So again, the daily all the way through the 3-day looks very good. Weekly, yeah, monthly just looks ugly. monthly, you need $50,000, right, to turn that around. Bi-weekly, or the 2-week, needs 39,000. It's possible. It's possible. But the weekly just 32,700. So let's see. Let's see if we can get to 32,700. Yeah, very similar on the CME chart. So, yep, almost identical. Okay, guys. Again, I've been looking for this pattern for the last couple weeks, and finally we're putting in the pattern that I've been hunting down. Okay, it's been a very boring couple of weeks, and we've been kind of on the edge. Any bad news could have tipped us over, but we are seeing that pattern. Back here, when I marked out this pattern, you can see it did result in a pump, and then we came back down. And, in this case, just the example that I'm using, it was the bottom of the market already. And from there, we went up. There's no guarantee that this is the bottom of the market, okay? It doesn't have to be at the bottom of the market. This pattern gets put in many places. Like here was consolidation, kind of a fake out down and a pump up, right? So it could have just as easily been over here that I was measuring, right? Or somewhere right here or right here. Okay, so don't get hung up that this was the bottom of the chart. We don't know if this is the bottom of the market yet. We really will find out in June, depending on what the American government, the, you know, depending on what the Federal Reserve decides to do in terms of interest rates. And that's going to be on June 14th to 15th when they'll make that decision. We're going to have some additional consumer prices to find out if inflation is still increasing too rapidly on June 10th, I believe. And we did get a little bit of positive news that it was decreasing faster than we thought the other day. So again, like a little bit of positive news has come into the market. Stocks are pumping off of that. You can definitely see this relief rally in the stock market where they have just been hit really hard. And so they're super excited to just get that relief. And, how high can this continue? I don't know. We are starting to get into a resistance area, and this whole area can be considered fairly resistant. And then we also have this kind of diagonal here. So even if we do get all the way to the top of this area, that's probably going to be the limit. Like this could be a really great rally. And but do I think that we could bust through that? Probably not. The economy still has some work to do. It's not like inflation just went away overnight. So there probably are going to be a few more months of, quantitative tightening, of increasing interest rates, and of policies that really go for, attacking inflation. And, so don't expect this to necessarily be over. A lot of this FOMO could be just regular retail, and retail does have a tendency to just like sell in a panic if any bad news comes up. Okay, so that was your alpha for the day. Stay safe and happy trading.